you. We haven't actually met properly before.
No, lovely to meet you.
I understand you just finished an interesting session with Simon.
I have. We were talking about the do's and don'ts of compliance, and a delightful article I wrote off the back of probably not a great day, but decided to vent myself ever so slightly on LinkedIn, and that apparently caught Simon's eye. So yeah.
So I look forward to listening to that when it comes out. So I understand Simon tells me that you offered up the topic of operational resilience in that conversation.
I did, yeah. I was explaining about how, once a tool or a process or something has been implemented, how oftentimes compliance doesn't necessarily go back and review how that actually panned out, and not maybe in enough depth. And that brought me on to operational resilience, which obviously gives you a great excuse these days to go digging into all of the little sidelines of your business, all of the little tools and features and functionalities that you may not necessarily have realised were there. But it's also live on my mind because for anybody who doesn't know, it's the 23rd of October today, and 2 days ago AWS completely crapped itself in North America, and obviously caused us all to suddenly bring operational resilience back to the fore.
To the fore. It's interesting though, I mean, I don't know what your view is, but it still takes an event like that to make a lot of people stand up and realise how important it is to focus on, even though there's reg requirements around it.
Yeah, I think the kind of shrug response 10 years ago would have been, well, all of our stuff is built onto AWS, and if AWS goes down, well, everybody's stuff.
It's a systemic problem.
Yeah, and the reality is it doesn't really give you the excuse to not service your customers because, as you said, there's regulatory requirements, there's obligations there that you have, but there's nothing like a black swan event to just remind us all.
Exactly. And in terms of your involvement from the compliance perspective, how do you see that relating to operational resilience? You've just mentioned processes and looking back at things that you've rolled out or whatever.
I think DORA. So obviously you've got operational resilience in the UK, and in the EU we've got DORA, and DORA was obviously quite heavily led by the chief technology officer. What's really interesting is, so Navro, my employer, is based and has a license in Ireland, so we have to meet both operational resilience and DORA standards. And what was quite interesting was that DORA put the CTO at the forefront of responsibility. And it became very apparent, not just at my firm, but at many others, that the CTO was not used to dealing with a regulatory framework and the requirements that came from it. So the starting point there is compliance is always forefront or legal. In Navro, it's compliance is at the forefront of reading the regulations and relaying that to the wider business. But then secondly, in conveying exactly what that means. What do we actually have to do in order to be compliant with this legislation? So for Navro, the compliance team worked with all of the functional heads and the leaders, brought them all together, explained the problem to them, began the mapping processes, and actually we're running the mapping processes internally, partly because I've been with Navro since its inception, so I understand all of the different business areas, and we can guide that. But also the team has the knowledge and the context of the regulations in order to properly explain that to the business and explain to them what they need to do in order to meet the obligations. So I think we're quite involved.
So in terms of that, explaining things to the business and what they need to do, we at Shapes First have seen differing responses and reactions to that sort of message. How have you found that, Navro?
In terms of the firm's response?
In terms of the business getting involved in...
We've actually we've been lucky in that the business has been very collaborative. Bearing in mind, of course, we're a startup, so there's a lot of things going on, a lot of priorities. But actually, I think a lot of people have been very receptive to explaining what they do and how their process works, and potentially have brought out unbidden areas where they think there is potential failings, because ultimately they want the business to do well. And it's a little bit like audit. You slightly worry if people are covering things up in an audit. That's a problem. But culturally, we've got good buy-in from the top, because the top guys want to know and understand where there are risks and where there are issues. And that's encouraged the people in the business to tell us about their policies, their processes, and how things work and what the gaps are. I should probably add for context, by the way, we work in the payroll space, so we do very timely sort of same-day payments, domestic payments, and international, and those have to happen.
That could cause a lot of harm.
It really could, right? So the downstream impacts of those payments failing is quite high, and our culture is very aggressive to getting those done. I remember the CEO hates it when I bring it up because it was an offhand comment that he made, but actually it was quite meaningful to people in the business. And it's a Slack message, and it says, there's some guy in Poland who hasn't been paid yet. Drop everything and get that sorted. Right? And that was the culture across the businesses. This is really important. We have to do it. So when you present it in that context to your teams and you say, look, in order for this business to be successful, we have to get payments there on time. The systems have to work. Everything has to be pristine. And then you say to them, now tell me how everything works. Tell me where all the gaps are. People are surprisingly good at giving you that information.
Yeah, so I think that's an interesting example you've just given, payroll, and how important that is to people on the receiving end of it. And, you know, as a consumer facing off to these services with banks, payments firms, whatever, one of the things that I find astounding is if you come up against a problem or disruption or whatever, how the people on the other end of the phone, if you're lucky enough to get to a person on the other end of the phone, doesn't seem to understand that human impact element of it. So it's interesting to hear that you're making that front and centre of what you do. And given what you've just said, obviously you're growing. And do you think your approach to operational resilience will be an enabler to actually supporting growth and more products, more customers, and so on?
I think when you mentioned earlier about you have to have that event to realise and to crystallise how bad it is, that's somewhat the unfortunate thing. At Navro, we do understand that we've got to do this and that we've got to have good uptime, that we've got to meet our SLAs, we've got to be responsive when things don't happen. And honestly, 9 times out of 10, if a customer phones up and says, I've got a problem, and the person on the other end of the phone goes, yes, we're aware of it, we are working on it, I'll give you a little bit more detail as soon as I know, at least you feel like they understand the problem and they are then working on it. I think what tends to happen, though, in most firms is they don't realise that that's a potential risk, and then that black swan event happens, and then they get the downstream damage and the impact, and it's too late. They haven't planned for it. They didn't have the operational resilience, the business continuity plans, the recovery plans, all of those other things. And so when they get hit by that, it really it takes a toll, and they don't realise how bad that's going to be until it happens.
And do you think that firms, other than yours, are maybe a bit lax at their communications planning and not putting enough out there as and when they do have disruption?
I think it's very easy for firms to hope that it won't become public if their systems and their tools and their processes go down. It's interesting because in technology world they literally have websites where you can go to and you have like downtime and all your stats are reported, which makes them much more reliable and easy to deal with, because you don't bother phoning to say, is the system not working? You just go to a web page and it says, no, AWS is down right now. Fine, carry on with your day. So yeah, I do think if people were a little bit more proactive with communications. Now that being said, one of the things with operational resilience is you have to set yourself tolerances. You know, what level of disruption to the business do I report this as an issue? Do I escalate? Do I engage my my sort of backup plans and so forth? And I think you have to establish a kind of safe level inside of your business, at which point you will communicate with customers. You know, a 5-minute blip, you're probably not going to bother, but if you are down for a longer period of time, maybe you should notify them. But then it also depends on you understanding and knowing your business to the point where you know how critical your business and your service is. If you've got an online pension portal that people log into maybe once every couple of years to check whether they've actually still got a pension, you probably don't need to report it to everybody. If you're a live, real-time issuer of prepaid cards where people are using your card absolutely all of the time, then you probably do need to be a little bit more proactive, or at least
So
message
yeah,
through
so
the app.
when we're working with clients on operational resilience, we often use the phrase drivers of harm. Can you define what your drivers of harm are for this service in the types of clients that consume it? And I think certainly, I think that's a new concept for even firms that have been doing this because of the regulatory requirements, both DORA and operational resilience in the UK. It seems to be something difficult to get the head around sometimes because typically in the past everything's been on a let's look at the revenue that we're using lens rather than let's look at the potential impact it's going to have on Joe Bloggs not being able to feed his family this evening, or something horrendous like that. Did you find that a challenge? Did you find impact tolerance setting and drivers of harm a challenge?
I found the problem actually with it is how far do you extrapolate from, Navro is a service provider, Navro services this customer does this with this person, and fundamentally it's payroll, so somebody is getting paid, which is easy it's easy when it's the beneficiary. If the beneficiary doesn't get paid, we can foresee the harms, because it's quite easy in our own lives to go, well, if I didn't get paid, I might miss my mortgage payment, then this might happen and that might happen. It can sometimes be quite hard to move through the different steps and the different people involved. So a friend of mine who gets some form of disability benefit, and that is there to pay for carers and everything else, but the way that is set up is through a prepaid card through somebody else that is actually then done by the local authority. The card issuer for that has no visibility of the underlying person, and therefore they don't necessarily know the harms that are being done when that money doesn't come in. That might be the person's only source of income. So I wouldn't say with Navro. With Navro, it's very clear. There's a lot of harm that can be done, and we fully understand that, and we take that on board. But working with other friends and colleagues and people that are in different sectors, sometimes it's very hard for them to see those degrees of harm along the chain. And the chains can be very long.
Big, and even different types of clients. If you're dealing with big corporates, for example, other financial services providers, you have to put a completely different lens on the type of harm that you might be doing to them by that service not being
available. But you also need to put this into context with your client base. What types of customers have you got? Do they have access to another means of payment or another thing that they can do in order to meet their financial goal? And that again can be very hard because you don't know whether that's their primary bank account or a secondary or a backup.
You haven't got all the data.
Absolutely.
You just have to make a best estimate, I guess.
Or in some cases, perhaps look at a worst case scenario, but then that does tend to drive your entire behaviour towards these. And I mean, the problem with compliance people is we are notoriously, dour and risky, like risk averse. We will think of the worst case scenario in any situation, and that is not necessarily the best way
to do it. Because that will be the 1 in a million or whatever.
Absolutely.
And you could end up setting your tolerances at such a low level.
You could be in a situation whereby, so one of the things with DORA is you risk assess each of your tools and the criticality of the tools and third-party vendors that you use. And one outcome of that is I could say, well, I require a redundancy for sanction screening, because in the event I don't have a sanction screening tool, I can't make payments. If I can't make payments, bad things. But then you look at, that's the worst case scenario, the asteroid hits the Earth kind of thing. But then you look at the actual uptimes of the servers that it's hosted on and how frequently that tool is actually down, and you realise that whilst they could have a secondary backup at great expense to pay for the service, to have the backup and everything else, in actuality it's a 1 in a million chance that it will go down, and therefore I shouldn't necessarily put my efforts into planning for that disaster if it's never going to happen.
So that's a key element of this operational resilience analysis, be it for DORA or the UK OpRes, your third-party supplier resilience, and particularly your contractual arrangements and SLAs with those providers, and it's not always something that firms can negotiate either. There's EULAs and things like that the big firms certainly aren't prepared to move away from. Have you found that a challenge?
I have, although very interestingly, the big firms, the AWSs, the Googles, etc., that host big infrastructure, seem to be very obviously publishing they were trying to get ahead of, because I mean, they fundamentally service a large amount of the financial service industry. So they seem to be trying to get ahead of the game and including those clauses and everything else in their contracts. Where we found it a slight issue is in the sort of smaller scale vendors who didn't necessarily, they're not attuned to servicing the financial services sector. And so, firstly, they might not have had an in-house legal team, in which case getting their contracts renegotiated and renewed is quite hard. Secondly, they may not have understood why they needed to. They may not have realised they were a critical part of somebody's infrastructure. But also the sheer scope of the number of people that we were working with and defining what exactly critical meant inside of that inside of our structure and how we operated. But yeah, I think the smaller vendors actually posed the bigger problems because they weren't necessarily attuned to or used to dealing with contractual changes and with regulated firms.
It's quite interesting that you've brought that word critical into the conversation. And in my experience, and I'm sure this is true for everyone, if you go to 15 different people in a firm, they'll all give you a different definition of critical.
My favourite one, by the way, was we spoke to sort of a wider industry event and asked whether something, what was their definition of critical, and somebody pointed out to us that they had found a number of vendors that had been described as critical, marked as critical vendors, because they felt if they didn't call it critical, the CFO wouldn't sign off the budget. And because obviously the CFO's there going, well, if this isn't actually absolutely essential to the business, then why are we paying for it? So that's not really the definition. But.
So how do you overcome that then?
I like a very simple phrase, which is, if this goes down for 2 hours, are we, and then I'm not going to swear, but that's basically the summary of it, right?
Yeah.
If this goes down, if this piece of software or this tool or this system or this person, because operational resilience has to look at people too, is unavailable or goes down for 2 hours, what is the impact on the business? Do the lights go off if we lose this tool? And it's amazing how many different tools or systems could fall into that category, but then you realise actually they're either nice to haves or they're there for monitoring or for backup or to provide dashboards and everything else, and you realise actually there are a smaller number of critical core systems in your business than you might think.
So do you think that is a key element to the resource mapping side of things then, that true understanding of what you're using a widget, a system, platform, person, department for?
I think it is. I think you have to map. An example I gave recently about how you do that mapping is everybody in the business should be able to understand it.
Yeah.
So you should, in theory, be able to take, I was about to say your receptionist, we've got an incredibly bright receptionist at Navro, but she should be able to explain to you from the whole process, end to end, how it works, what systems you then touch, and everybody in the business should have a sort of good map of that and of how everything works, because then they understand the gravity of things not working or breaking or falling over. So I think, a key part of that mapping exercise is understanding how everything links together, who does what, and what the failure points can be or could be, including, as you said, people.
Yeah.
If this team isn't available or if they get backlogged and they're unable to meet an SLA, what happens? The processes fall apart.
Yeah. And have you gone into quite a lot of detail in terms of
I've
your
gone
mapping?
into a painful level of detail,
Really?
but that's my own obsession with such things. But also, it's a curiosity, right? You want to know all of the different tools and systems and everything that gets touched, and it's a curiosity when you look at IT or developers use this tool. What does that tool do? How does it impact our day-to-day? Is it fundamental and is it critical? To be clear, though, our starting point was to just ask area owners and team leads, what tools have you got? What systems have you got? Talk us through it. But the other thing is it gives us an opportunity as a startup to understand what we have and what we don't have. A key thing, we're doing a lot of regulatory expansion. We need to understand what we have, not necessarily from an operational resilience perspective, but look at data privacy. As a result of operational resilience and mapping, I know that we use a process for storing our data, and I know what that process looks like, and I know where those servers are. Great, now I'd like to move into getting licensed in Malaysia. Can I have my servers in those locations, or do I need to move them somewhere else? So that level of overarching knowledge that I got, it's really useful.
Okay.
It's probably too much.
So I don't know whether I'm probably in the same camp as you in terms of loving the detail, but I think what you have raised is an exceptionally key point, that operational resilience isn't a tick box for a reg requirement at all. It's an enabler for you understanding your business, how it operates, what needs to change, and how you might have to change things so that you can grow in the future.
It's also, I mean, these things can always go the other way. If we look at AML and financial crime, the idea of a risk-based approach is that I don't subject everybody to this massive level of scrutiny and oversight that I would have to do with a high-risk customer. It is entirely possible through operational resilience. I actually discover I have one massively super redundant system that I'm paying thousands for that actually I didn't need. You know, maybe we had an old tool that we didn't turn off. We kept it there for backup and redundancy, but actually we didn't need it. You know, you'd be amazed how frequently you find you've got servers or systems running in the background that you still didn't need, or a tool or a thing that you actually aren't using anymore. And the benefit of going through all of your contracts again is you look at it and you go, well, what does this tool do? What are we using it for? Oh, we don't actually use it. Well, there you go. There's an opportunity to turn that off. So it's a useful exercise in more ways than just the regulatory.
Absolutely. Cost saving, moving forward with your business, growing. Absolutely. And what do you think other firms can do? Because I think bigger firms, the bigger a firm is, I guess the more legacy they have, maybe there's more doors to open, and you never know what you're going to find in there. It is quite difficult to piece it together. Even, you know, small to mid-sized firms get to the stage of growth where they have that issue where they might have started, as you have, with all good intentions, like we know what we're doing, we know how we're operating, we've got a great operating model, we've documented it, we've mapped our resources, but they haven't gone back and revisited. Every time a change goes in, every time the business wants to do something new or go into a new jurisdiction or new reg comes out or whatever, how do you think firms can better address that maintenance side? I don't want to call it operational resilience for regulatory reasons, but it is.
Yeah, you feel like, given that it's such a wide-reaching thing and it has so many benefits, it should have a better name that sort of belies all of those extra benefits. I know the cliche of every single policy everyone writes is this is a living document and we will update it.
It's on every document you've ever seen, isn't it?
There you go. It's copied and pasted in, and then that policy becomes. I mean, we don't print them out anymore, but it used to be they get printed out and used as a doorstop. It's the old sort of comedy version of that. But I think the reality is it's an exercise that does need to take place more frequently. Not necessarily in as much depth, but you should have a change management process that considers that. And there are ways of tracking that. So one of the things that we did at Navro right at the start to identify all of our systems was we used to use an online payment platform to buy and pay for all of our suppliers. So we went to that platform, we downloaded a copy of all of the payments we'd made in the last month, and therefore we knew all the names of the systems that we'd done. So therefore you could track changes by looking at, well, finance could tell me when a new purchase order is signed off and I have a new system involved. Well, that system must slot somewhere into the big map of all of the things that we're doing. So I could take that and update that and then update that live throughout the year. Or when legal sign off a new contract with a vendor, I could get them to tell me who the vendor is. Or when we reach the exit point, an exit period of that contract, well, how does that impact the system that I've got? HR can give me resource mapping. So rather than having to go through that whole exercise and build it from start to finish, what I could do is use the different people and teams inside my company who know what's going on and know how the business is evolving, and use them to give me the updates and everything else. I will say though, compliance monitoring, transaction monitoring, all of those things are great. At some point you have to do a KYC refresh. So strap yourselves in for 3 years' time when you have to go back and redo that whole map from scratch and realise only half of it's accurate.
Yeah. That's an interesting point, and said with good humour as well.
Yeah, well, and a certain amount of PTSD.
I guess we've all got something like that.
I'm sure everybody's got the horrors.
Particularly in the compliance world, I'm sure.
Yes, it is. I mentioned earlier about sometimes you come back and you look at these things, 2 years on, 3 years on, We realised that these things have not necessarily been operating the way that we thought, or the way that we expected, the way that the original specification was set up. But you only have to look through all of those FCA fines, and you realise that's a warning from history of somebody thinking that something was doing something, and then actually it turns out it wasn't.
And it's amazing how many historical lessons that are still to be learned from.
Yes, yeah, absolutely. Let's face it. The lessons can be learned time and time again, and yet people will still make the same inevitable mistakes.
Yeah. So one last question then. What, if you could pick one pillar of operational resilience that you think is the key to making a firm better at it, what would that be?
The mapping, possibly because it's been the most fun. God, that's a weird thought, but it has been genuinely the most fun piece of that process from my perspective, because it gave us the opportunity to look at what was essential and what was key inside of the business, and also gave us the opportunity to look over all areas. That being said, third-party vendor risk is clearly at the moment the key thing that has come to the fore, and I think we've all had areas where we think, well, X big firm uses this vendor, or everybody uses AWS, therefore. And actually, I think that the intention of operational resilience and of DORA, to a degree, was to try and regulate some of those big vendors that actually have a lot of scope and a lot of leeway to damage the industry. And I think the really interesting things going forward will be how that actually plays out, and how the downstream effects of AWS going down for a brief period are actually then felt, whether the regulators suddenly feel that that's an impetus for them to do something. So actually, of the pillars, I think third-party vendor management will be the sort of key.
It's very key going forward, isn't it?
And it'll be interesting to see how that plays out.
Yeah, absolutely. Totally agree with you. It's been really interesting. Thank you, Mike.
Not a problem at all.